Welcome to our case analysis of Guarantee Home Mortgage Corporation. In this analysis, we're going to talk a bit about the company, the industry, the various forces, factors, and influences that work within it, as well as a set of recommendations that we believe will propel Guarantee Home Mortgage Corporation into the future. So a bit about the company's background. It was formed in 1986 by Wendell Mondrell under the name Guarantee Trust. In 2019, the company underwent a name change to Guarantee Home Mortgage Corporation to reflect its growth and independence. The company operates in the mortgage industry where it has achieved and maintained several distinguishing awards. The company provides full financial services nationwide in 48 states. The company is based in Murfreesboro, Tennessee, with around 178 employees. The company is dedicated to caring and developing its community and to creating a family relationship with its clients. We're now going to discuss the Porter's 5 Forces model to look at how profitable and appealing the mortgage industry can be. The first force that we're going to look at is the intensity of rivalry. This represents a fairly low force because in 2017, the number of state licensed mortgage companies grew to a total of 16,966. The top market leader, Quicken Loans, makes up 5.7% of all total loans. Given the United States' current housing development boom, it means that mortgage companies don't need to directly compete against one another to attain market share. The next force that we're going to look at is the power of suppliers. This represents another fairly low force because mortgage lenders have several diverse options available to them for sourcing and making them not rely on any one source. These sources can include depositor funds, government-sponsored enterprises or GSEs, and borrowing money from larger banks. The next force that we're going to look at is the power of buyers. This represents a fairly high force because consumers are individual and numerous, but they typically only make a few mortgage transactions over their entire lives, and they do represent a large financial commitment. This makes them highly sought after and gives buyers more negotiating power. The next force that we're going to look at is the threat of substitutes. This again represents a fairly high force because in this industry, consumers can choose to leave and simply choose to rent their property instead of own. In fact, in the United States, roughly 1/3 of all households choose to rent instead of own. The next force that we're going to look at is the threat of new entry. This represents a fairly moderate force because while companies do have to adhere to different rules and regulations depending on their status and affiliations, which can affect their services, they do have relatively other few high barriers to impact. All this to say, we would give the mortgage industry a fairly moderate appeal because of the low intensity of rivalry and the low power of suppliers, coupled with the high power of buyers and the high threat of substitutes.
Let's talk about company strategy. While operating as Guarantee Trust Bank, the organization is an extension of Volunteer State Bank. This means that their operations are governed by the same rules and regulations as banking institutions. The primary focus was business-to-business lending, especially the secondary mortgage market. This actually accounts for over 85% of their business, whereas the business-to-consumer or retail line only accounts for roughly 12%. Guarantee Trust Bank has a strong regional presence. They operate and service loans in 32 states. Because of the two different lines of businesses, they have two different digital platforms to service those clients, one for the business-to-business clients and a separate one for the business-to-consumer clients. They've now have undergone some changes and are operating as Guarantee Home Mortgage Corporation. This company will be a standalone lending agency and no longer a subsidiary of Volunteer State Bank. This means that they'll be subject to different rules and regulations. They plan on implementing full service experience for the borrowers. This starts at loan origination, goes to close, and post-close in servicing the loans in-house. The company also plans to go national and provide services in 48 states. Lastly, Guarantee Home Mortgage Corporation plans on integrating the two separate digital platforms to create one platform that will service both sets of clients.
There are 4 driving forces that we believe have a major impact on the mortgage industry. Those four forces are interest rates, government policies, the economy, and demographics. Interest rates have one of the biggest impacts on mortgages. The higher the interest rate, the more expensive mortgages are. So, consequently, if a mortgage is expensive, people are less inclined to buy new homes. It's more of an incentive for them to stay in their current lifestyle of living. However, positive incentives come through government policies. There are some policies where the government gives assistance in buying homes. For instance, first-time home buyers, depending on their annual income, could qualify for down payment and closing cost assistance because some people can afford to make the monthly payments on mortgages. However, saving for the closing cost and down payment can become a bit challenging. So with that help, people are given more incentives to go out and purchase homes. Another big factor is the economy. The overall status of the economy, especially economically, is a huge factor. Depending on the unemployment rate or how much things cost or the cost of living in some areas, that plays a huge role on the affordability or whether or not people can afford to go out and buy homes. Lastly, demographics. Depending on where a mortgage company is located, could be very beneficial or very harmful. Some cities have more buyers than renters, and vice versa. Other cities have more renters than buyers. So depending on which area the company is, can determine on whether or not it is beneficial or not for them.
Key success factors. The first key success factor is to establish impactful social media presence. Social media has become a commonplace for knowledge sharing, and platforms enable users to connect worldwide. This is a perfect opportunity for companies to market their products and services and engage consumers. In order to leverage this connection, it's important that the content being shared and created is relevant to the consumer's everyday life and not only the home buying process. Share decorating tips, recipes, and entertaining ideas. Secondly, marketing has to be adaptable to reach multiple generations. Baby boomers, Generation X, and millennials are all consumers. It's important that we cater to their preference when marketing. Millennials prefer digital and technology, whereas baby boomers prefer something tangible. Third, establish and leverage partnerships. Whether the partnership is with a realtor, a developer, or even another lender, it can be mutually beneficial. Realtors have the ability to introduce clients as well as other realtors. With developers, you have the opportunity to be the preferred lender. And even with other lenders, if there's someone who doesn't quite meet the standards that you're looking for, you can give a referral and vice versa. Lastly, personalized services. Consumers don't want to be known by a loan or a reference number, especially when they're making one of the largest purchases of their lifetime. It's important that the client feels that they're being supported with the resources of a large company, but that the loan origination officer is able to cater and tailor the services based on their individual needs.
As part of this case analysis, we also conducted a SWOT analysis where we looked at both the mortgage industry and Guarantee Home Mortgage Corporation to identify some strengths, some weaknesses, some opportunities, and some threats that are both specific to the company and to the industry in which it operates. So going through some of the analysis to touch on the key points, we thought the biggest strength for GHMC was its reputation. It's been in business since 1986. It's accredited with the Better Business Bureau with an A+ rating. It's been named one of the best companies to work for in Tennessee. And it's also a $1 billion company in the mortgage industry and operates in 32 states. So we felt that it had a strong reputation. Its B2B business is a huge strength of 88% of revenues come from this revenue source. When we look at weaknesses, I think the connection with the retail market was one that we identified. The consumer business only representing 12% of Guarantee's revenues. We also felt like the partnership or lack thereof with any type of referrals that they get by working with real estate companies was a weakness. When we delved into opportunities, we felt like technology and mobility was an area for both Guarantee Home Mortgage Corporation as well as the industry. We felt like there's a strong housing market right now. It's certainly a seller's market with a lot of homes being built across the nation, which means a lot of mortgages that are needed. Have an opportunity to expand nationwide, and we touched on this in the weaknesses, developing a better relationship with consumers. And Heather also talked about the rebranding effort as another opportunity. When we look at threats, I think the most obvious threat to the housing industry is an economic downturn. Economic downturn affects almost all businesses, but can heavily impact the building and buying and selling of houses. An increase in lending rates from the Federal Reserve makes it more expensive to get a mortgage, which could have a negative impact on the mortgage industry. As Heather mentioned, financial and banking regulations can happen quickly in this industry. So it's always a threat to more red tape and more processes that have to be followed. And then crowded and regionalized markets. Mortgage industry can be sort of regionalized. It makes it difficult to compete on a national level if the company is not well known nationally. So those were some of the strengths, weaknesses, opportunities, and threats we identified in our analysis.
After doing our analysis, there were 5 strategic concerns that came to our attention. One being the relationship that the company has with its customers. We believe that Guarantee Home Mortgage Company should evaluate how they communicate and interact with their customers to ensure that it is in the most effective, most up-to-date, and most convenient way possible. Another concern is the national brand recognition. If the company were to expand their brand more nationally, then they would give themselves the opportunity to increase their customer base rather than it being limited and essentially increase their revenue. Our third concern was the partnership, relationship, and referral relationships. Guarantee Home Mortgage Company could partner with different companies to create a referral process so the companies could refer people to the company to give Guarantee Home Mortgage Company a opportunity to reach and gain more customers than they would have possibly without that partnership. Also, the company could create a referral reward system for their current customers to give their current customers more incentive to tell about the company, and the company could get customers based off word of mouth. Another concern was the cost of marketing to expand to 48 states. And lastly, engaging their clients to keep them as clients. It is a very, very competitive market, so it is very important for Guarantee Home Mortgage Company to keep their clients rather than them possibly going to a different company for their next mortgage.
Our first recommendation would be to increase social media presence. There are several platforms available, but the most popular ones are Facebook, Instagram, and Twitter. Pinterest, YouTube, and LinkedIn are also commonly used, but even sharing Guarantee's blog would enable Guarantee to connect with and engage consumers. We know that lending transactions only occur 2 to 3, maybe 4 times within an individual's life cycle, so it's really important that we connect early on to gain that repeat business. So how do we engage consumers pre-home ownership? We recommend that in addition to direct marketing the products and services available via social media, that we're also using social media as a tool to engage consumers and really sell the idea of home ownership and create that emotional connection between the consumer and the benefits of home ownership. Some of the things that we can do would be to post articles on social media about the benefits of home ownership, as well as posting the great rates or the great closing discounts that we have on the closing costs. Also, we can post photos of 2 kitchens and take a poll. Hey, which kitchen is your dream kitchen? Or we can share recipes and encourage consumers to recreate this recipe or discuss what their ideal dream kitchen would be. One of the things I really like to see is posting photos of holiday decorations, and we can caption it, "Imagine decking the halls in your new home this Christmas." So we're really selling the emotional piece of home ownership. So how do we engage those consumers when they're in between transactions? Because we want them to come back for their second and third home as well. One of the things I find really beneficial would be to post articles about selling and buying homes at the same time. It's a process that not a lot of people are familiar with. So by posting tips and tricks on staging the current home and how to get the best bang for your buck in terms of upgrades and improvements in the current home, so that way you can take that value onto your second home. Whenever those consumers are ready for the second and third purchase, we'll be ready to handle that transaction.
We recommend a strategic alliance between Guarantee and Keller Williams. Keller Williams is a real estate company that has similar values to Guarantee in that they value God, family, and then business. The company illustrates this through their annual training event, which they dub a family reunion. The company also is devoted to their communities through their participation of Red Day. The company has won many distinguishing awards and has offices in 49 states. In 2018, the company closed around $256 billion in sales volume and around 842,000 transactions. We feel a strategic alliance will have many opportunities for both companies. For Guarantee, it's the opportunity to grow their non-first-time homebuyer market and the better ability to grow their brand recognition through an established Keller Williams agent connection in their new expanding states. For Keller Williams, it's a source of new clients as well, especially those first-time homebuyers and those who may have pre-approval status through Guarantee. They will also have a trusted source for diverse loan products in Guarantee. The companies will both benefit in having a better ability to close loans on time through a personalized, established connection and relationship. They will also have increased confidence that their buyers will have a good overall experience through their extended family of Guarantee and Keller Williams. They will also be partners that can share new market insights and data. In this alliance, we feel that Guarantee would not receive any referral fees, and this would be non-mutually exclusive in accordance to RISPA and for legal simplicity. As a franchise company, Guarantee will first target the 26 Keller Williams agents in Tennessee, and then they will expand by regions and through organic agent-to-agent referrals. Allied offices will have an established Guarantee home mortgage link on their website under preferred lenders, and they will also be provided with marketing and educational materials to distribute to new clients. Guarantee will measure the effectiveness of the strategic alliance through their new client questionnaire before and after the alliance is formed, and by having communication through their agents and clients.
Our third and final recommendation for Guarantee Home Mortgage Corporation would be the development and introduction of a mobile application. So the iPhone was invented in 2007, and with that came the advent of the App Store. So a place that consumers can go and download their favorite app to interact with their business or play games. So fast forward to 2019, and we do almost everything through an app, whether it's dating, whether it's sports, whether it's researching a mortgage, whether it's banking. There's an app for basically everything. So we think to address the strategic concern of the lack of a strong connection with the retail client, that the introduction of a mobile application would help mitigate this. So some of the key features that we think would be useful in the app would be having personalized loan information. So if someone was browsing for a loan, they could put in their information, their credit score, where they're located in the country, and get a quote. And then if they could compare that quote against different vendors, that would be useful as well. We also think the ability to upload documents would be helpful. So as you're going through the loan purchasing process, the ability to upload key documents to help expedite the securing of the loan would be a great feature. And also push notifications. So this is standard with basically every application, and the ability to get a notification, in this case, maybe when the next mortgage payment is due or when refinancing might be a favorable option for the user. Customer service, so as someone is researching a loan or having issues with their loan, being able to send a message through the application that is then responded to by Guarantee would be a useful tool in the application as well. And then lastly, news and updates. So we talked a little bit earlier about an increased use of social media. So whether it's just a notification when there's a new social media post or when there's maybe interest rates are being adjusted by the Fed, just any updates that the user can set their preferences on to prefer. From an implementation standpoint, we think this makes sense to coincide with the announcement of the new brand. So, releasing information to current customers that, one, the brand is being updated, but two, there's now a mobile application to go with it. And then we think this could be part of the expansion plan. So the ability to compete nationally by having an application that can be downloaded by anybody anywhere in the country. And then we also think collaborating with partners as the app begins to be pushed out. If someone is using it and can look and see the different real estate partners that the company partners with in their area, that would be useful to finding a house and getting a loan. And the expected benefits, we think it'll be a better overall consumer experience. It'll strengthen that connection, especially with the younger generation, which is mostly Guarantees customers, and then give it the ability to compete on a national level with companies like Rocket Mortgage or Quicken Loans, and then ultimately more loans that are processed quicker, which leads to economic and financial benefits. So if you have any questions about any of our recommendations or any part of this presentation, please reach out to us and we'll get those answered. Thanks.